Hello and welcome to Crux Investor. We caught up earlier today with George Ogilvie, CEO of Battle North Gold. We talked through some recent press releases, their plans for 2021 getting into production and exploration. If you want our thoughts and opinions on that conversation and indeed the company itself, you can find that at cruxinvestor.com/club, where you can also find detailed company reports. There are commentaries from experts from around the world on a variety of companies and commodities. There are training videos on there to help you with your diligence process, and also summaries of other interviews that we've done to save you some time. And there's a big thriving community of investors sharing their thoughts and ideas with each other in a nice friendly way, in a safe environment, free from trolling and abuse. Well, wouldn't that be nice? So why don't you go and join them at cruxinvestor.com/club. And we'd love your feedback too. So do give us a like, leave your comments below. We'll try and get back to absolutely everyone. And if you want to see what we talked about today, take a look in the description. George, how are you doing, sir?
I'm well, thank you, Matt.
Good to see you. Happy New Year. We've not spoken.
Yeah, Happy New Year to you too.
See, we get to do it. The Celtic people, all around the world, people are looking at these Scottish. I'm going to go with Scottish today-ish. With a name like Gordon, I can get away with it.
Absolutely, lad.
They look to us for celebrating it at New Year's. But it's a quiet one, I imagine.
Yeah, very quiet, yeah.
Okay, well, look, wanted to get a hold of you, and thank you very much for joining us on the show. Appreciate it. We spoke at the end of October when you went on a wee bit of a run, and we wanted to sort of talk about some of the things that you've done since we spoke as well. But before we do, when we do that 1 minute overview, and then we'll pick it up from there.
Yep. So Battle North Gold has its primary asset located in Red Lake, Northern Ontario. It's a gold mine. It has significant infrastructure already in place, $700 million worth of investment. Over the last 4 years, we've been technically de-risking the project, and we now have a fully funded project. We're now back into the construction and development phase, and we anticipate pouring our first gold doré bar before the end of this calendar year.
Good stuff. Good stuff. Okay. Well, I'm not going to get into the business plan strategy. We talked about that. We'll put a link below to that so people can sort of see. And I do want to talk about this bit, what you inherited, what you walked into, and what you've had to do to kind of straighten things out a bit. But let's talk about some things that you've been doing since we spoke in October. Okay, I mean, first up, 43-101 on Bateman. Okay, we saw that.
Yeah.
Happy enough?
Yeah, I was very happy with that. I mean, it's 111,000 ounces initial global resource. Remember, the deposit has only been drilled off about 200 meters below surface. And we've got 40,000 ounces of measured and indicated in there at just over 6 grams, and 70,000 ounces of inferred material at almost 8.5 grams. This is not our primary deposit. This is going to be supplemental incremental feed into the mill, because the Bateman gold mill has a capacity today of 1,800 tons per day. And the feasibility study for Bateman showed an average life of mine production of 1,300 tons per day, essentially meaning that the plant is only running at 80% of its designed capacity. So if we can get a supplemental 300 to 500 tons per day into that mill, given we're already paying for the fixed infrastructure, those incremental ounces at these gold prices will carry significant margin with them.
Right, okay. And I just want to run through these things, because the important bit for me is understanding what you're building here, how you're doing it, what this year's going to look like. Okay, so let's talk about, again, get it out of the way, the Finlay resource estimate again. It's just incremental feed, I guess.
That's right. There are plans this year, however, to continue to drill the deposit across strike and down plunge where it's open. So, over the course of this year and the ensuing years, we'll continue to look to grow that resource. And obviously, if it does grow, that's going to improve our business model and increase the life of mine.
Right, okay. And then the final bit of news, as it were, the credit facility you put in place, $40 million. Helpful.
Yeah. Well, that was absolutely massive for us, and I cannot overstate just how important that credit facility was. It was done with Macquarie Bank. Macquarie Bank is one of the most recognized commercial banks that lend in the mining space. They have their own due diligence team that did all the technical work on the deposit and the asset. And they also brought in an independent engineer. So it wasn't just the case of putting in the 40 million US facility to give us a fully funded project, but what was actually most pleasing for me was, given the former technical challenges of this project, having a bank like Macquarie Bank sign off on a 40 million facility and get through the technical due diligence was a massive check mark for validation of the project, in my opinion.
Yeah, it was that. And now we're getting to the bit that I'm most interested in and trying to understand, just how investable Battle North Gold is. Okay. So you inherited a mess. People can look at our conversations, our first conversation. We talked about that kind of ad infinitum. It was a great conversation. If I look back at last year, the things that you've had to do, in fact, why don't we talk us through what were the challenges for you at the beginning of 2020? You had COVID to contend with, which you probably wasn't in the plans. But talk me through the order of play for you last year, and more importantly, what that has set you up to do this year.
Well, we knew at the beginning of 2020 the 43101 resource that we had was not at that point in time large enough, nor did we have enough measured and indicated resource that would convert into reserves to give us, a strong, robust financial and economic model. So the first thing we were doing, was, obviously in 2019, was continuing to do infill and expansionary drilling. And in the early second quarter of last year, we put out an updated 43101 on the Bateman project. And importantly, our reserves had grown substantially, and the density of the infill drilling was now down to an average of 17 meters, which is fairly tight, but is absolutely required for this deposit. And that worked out beautifully for us, because by the time we did the conversion of those reserves into the feasibility study, we ended up with about 635,000 ounces of contained gold that at the end of the day will give us 603,000 ounces of payable gold over the 9-year initial mine life. And we're very confident that gold is actually there, as I said, with that tight infill spacing. So that was a critical component. And then, of course, we embarked on the feasibility study itself, which came out in October of last year and showed a very robust project. We used conservative gold prices when compared to the spot price. So we ran everything at $1,525 US gold, which is a good $300 to $400 below today's spot range. And we ended up with a project with an NPV in excess of 300 million. There was over $400 million of free cash flow, which comes off the project over its initial sort of 9 years. And the IRR after tax was above 50%. So we were extremely pleased with those numbers. And of course, if you ran them at $1,900 US an ounce gold, the numbers are significantly higher. So we built in what we believe is a fair degree of conservatism into the feasibility study, both in the capital costs, the operating costs, the financial numbers through a relatively modest gold price. And we're absolutely determined that this will be a producing mine by the end of this year, generating significant free cash flow and returns for our investors.
Right. So again, I keep harking on about what you walked into and what you inherited, but let's put it this way: a very low base, right? So do you think it's quite easy to look good? You're coming off of such a low base, or have you got things that you just need to deliver because people are going to be automatically nervous or critical of anything that you do? How do you look at it?
No, I think this project has been challenging. I don't think it was one of those cases where this was such a low base. There was only one way to go up. There was obviously a lot of skepticism and negativity around this project. And, I think, as I said in our first interview, building a project and building a company, if I use the same analogy, is no different than building your house. And at the end of the day, if you don't put in the proper foundation blocks and you build the house in the wrong order, eventually you're going to have a storm or some sort of event that you cannot control. And quite literally, the walls and the roof are going to come crashing in around your ears. And that's exactly what happened on this project 5 years ago when they tried to take it to production on the back of preliminary economic assessments that have a degree of accuracy of plus or minus 50%. There was only a resource, there were never reserves. The drill density was over 50 meters in the inferred category. And there were arbitrary, lines or arbitrary dates put in place that were unattainable, yet they were all tied to the debt facility. So, there was this looming deadline, coming, which they had to attain. And they just really rushed this project when it wasn't ready for being rushed.
Yeah, correct. You just reminded me of some of the numbers involved there. Hundreds of millions of dollars raised off the back of something like that. Something we warn people about. I say PA plus or minus 30%, plus or minus 50%. Who knows? Okay, so you got a bit of cash now. You got about what?
Yeah.
What do you got? 55? How much?
Well, what we did was when we got we did our private placement. We closed out October last year with the debt facility in place or announced, including the 40 million, which would be about 52 million Canadian. Company now at that point in time had access to over 110 million Canadian dollars. Since then, we've actually paid off the Sprott loan facility, which was our former outstanding debt. It was due December 31st, 2021. But they had security over the project or the assets of the company. So we paid that off, which was approximately 15 million Canadian dollars at the end of December. So today the company and its bank account is sitting with $50 million in hard cash Canadian and access to an additional 52 million through the debt facility that is busy being papered with Macquarie Bank. So plus or minus about 100 million Canadian dollars now that we have access to. Right.
Again, it's a great case study one day. You have to navigate and circumnavigate some of these barriers that have been put in place for legacy issues. Let's say why, if you didn't have to pay till 2021, did you want to get rid of the Sprott debt now? Did it free you up in some of the decision making you need to make this year? Before the end of 21?
Well, we had to take the Sprott debt out because it had first ranking over the assets. And obviously, if Macquarie Bank were going to give us, 52 million Canadian dollars, they wanted to have first security as well over the assets. So we wouldn't have got Sprott Lending to agree to pari passu, nor was Macquarie Bank going to take subordinate debt. So it made perfect sense to get rid of one debt provider and take on the Macquarie facility, which is now securitized against the assets of the company.
Okay, fantastic. I just think it's worth explaining to you because, again, some of the questions we've had sent in, they're quite simple, quite basic questions, but good questions nevertheless, and it's worth sort of clearing up from that basis.
The other key thing I think, Matt, as well, with respect to that debt facility is, if you analyze the cost of capital, it's extremely, extremely competitive. So pre-completion and completion is when we attain commercial production. The terms that we got were 5.25% plus LIBOR. And given that LIBOR is around 0.25%, we're actually looking at a 5.5% interest rate. When you layer in the arrangement fee, which was approximately 2%, and then the commitment fee, which was 1.5%, you're looking at approximately 8.5% interest rate for a company that has a market cap of 250 million and is not yet in production and has no other producing mines generating revenue. I can tell you sub 10% cost of capital for a company of our size is absolutely fantastic terms for our shareholders.
Yeah, no, we see that a lot. We see that a lot. I would agree with that. Okay, so again, so slowly getting into it, but your mindset is what? You've got access to all of this cash. How do you go about allocating it, and what do you spend it on? The reason I'm asking it is, like, given again the history, given your attitude to how you've gone about systematically, breaking down the barriers, the problems. Do you try and sit with a lot of cash on your cash bank balance, or are you saying, look, we need to go full bore here, accelerate into this marketplace, take advantage of the high gold price at the moment, and we'll easily be able to raise some capital? We just did it with, look what we did on the debt here. How cautious are you, or is it more about trying to prove something?
No, it's going to be full bore ahead now. So there's some critical path items that have already started up late last year at the mine site. So, for example, we are recommissioning the 240-man camp that is going to house some of the fly-in, fly-out employees. It hasn't been used for 5 years. It's remained dormant. There's an ammonia reactor that has to go into the wastewater treatment plant before we can run the mill in order to treat for ammonia and discharge to the natural environment. We have to put in a primary crusher on surface to crush the run-of-mine muck from the mine that'll be 8 to 10 inch minus down to approximately 6 inch minus to feed into the SAG mill. And then we have to reinforce the tailings dam and start the first raise so that we're prepared actually for year 2 and 3 of production to accommodate the additional volume of tailings and rock that will be coming out from the project. So all of that actually started up late last year, and we're now in the process of awarding the underground development contract. And there's approximately 8.7 kilometers of development that has to be done between now and the end of 2022, which is when we should be declaring commercial production. So that contract will be awarded probably early next week.
Right. And again, just clarify, what do you mean by commercial production?
Commercial production is defined at running at 75% of the nameplate capacity of the mill. So the nameplate capacity is currently 1,250 tons per day. So 75% of that would be running at 900 tons per day. And we have to do that continuously for 90 days. If we're able to attain that, then we would then declare commercial production.
Okay. And is there anything that can stop you? I mean, you seem to have the cash. You've got the permits, licenses in place. You've got your own mill. What's going to stop you?
Well, there's a few other things that still need to be done. We have exploration agreements with our First Nation groups. We have 2 of those. We have very good relationships with them, but we will have to negotiate and put in place what's known as an impact benefits agreement. I can tell you negotiations started up with the 2 First Nation groups in early November last year. And we strongly believe by the second quarter of this year, we will be able to announce that we have signed IBA agreements with our First Nation stakeholders. So that's important. And then with respect to the power into the mine site, there's a 4160 kVA line all the way in. Currently, we have access to 5.2 gigabytes or megabytes of megavolts of power. When we get into full production, that number will be closer to 11 to 12. So there's an application in with Hydro Ontario to gain access over the next 12 months to an additional approximate 6 to 7 megawatts of power.
Okay, I was thinking, thanks for that. I was thinking more about the technical de-risking, which you referred to earlier. Is there anything that's going to stop you on that front?
Well, there's still plans this year, despite having the deposit drilled off on a 17-meter drill density in reserves. In the proven category, that drill density is around 8 meters, but it's 19 meters in the probable category. So there's further infill drilling that will take place this year in order to get the reserves down to below 10 meters is what we're striving for.
Okay. And you've got to kind of build, like I say, you've got to build up with the reserve, right? You kind of got to start that process here. But to what end? Is it to make your life as a producer easier, or is it to make you more attractive to people looking in? Because you're of a certain size, and there's a lot of companies of a certain size, and there's lots of talk about consolidation, and you're in the right part of the world, etc. So again, what are you working towards here? Because I know you can be a producer, but
no, Matt, for us, our go-it-alone strategy of putting this mine into production and then organically growing the company through close proximity assets and then the regional land package, which we haven't touched on just yet, that is our primary objective and goal with this company. We believe that generates the most significant returns for our shareholders. Of course, if we continue to de-risk the project, if we continue to grow the reserves, and now that we have a fully funded project and there's a technical report out, obviously, as the M&A activity picks up, I think people will look at Battle North Gold as a potential target. But that is not our primary goal with this company. We are building it, putting it in production, and as I said, we believe that will generate the most significant returns for our shareholders.
Right. You've arguably come in and done a difficult task. Okay, it is difficult, but the blue sky, just getting it right or getting it to where it should have been first time round is one thing. But the blue sky of the exploration, you talk about the potential there. I mean, are you exploration guys? I mean, you've come in and you've fixed something that was badly broken. But have you got an exploration team there of any note?
Well, we didn't until last year, November, and we went out and we hired a lady by the name of Maura Cobb. Maura's a professional geologist. She's got approximately 12 years of experience in the industry. But importantly, the last 7 years, she's actually been working entirely in Red Lake. And she was formerly the regional exploration manager for Goldcorp, then Newmont Goldcorp. And then over the last year, she had been the regional exploration manager for Evolution Mining, which is the $6 billion market cap Australian company that came in and acquired the Red Lake assets from Newmont Goldcorp. So we've been very fortunate in being able to attract Maura to our company. Of course, she brings a lot of intellectual knowledge and property with her that she hasn't shared with us, but it's all locked up in here. And I'm happy to say that the first permits for our first target were received in December. And we're busy mobilizing our first regional drill as we speak. And the first week of February, we will actually be drilling on our regional land package, which is the first time that has happened in almost 10 years.
Okay, but what have you tasked her to do, and how much money have you given her to do it?
Well, we currently have given her $6 million as initial drilling phase one. There's a supplemental $2 million that is probably going to be allocated to exploration drilling in and around the mine on those targets, which we call the String of Pearls, which obviously also includes McFinley. But we're very confident that she will have success, and there'll be an ability to come back to the market in the next 12 months, probably with a flow through or a super flow through, which can be done in Canada at a significant premium to further enhance and be more aggressive on the regional exploration.
Okay, so 2021 is about getting yourself into production by end of the year, getting a re-rate by being a producer, and you're going to try and tell a better exploration story for your existing land package. So no additional money is required to go and buy anything.
That's correct. But here's the beauty, in my opinion, of Battle North. For most companies, when they go into the development and the construction phase, that's when the share price can sort of wane as people wait for the announcement of first production in the first couple of quarters of production. Given what's happened in the market over the last 18 months with regional exploration success and what has happened to companies' valuations, we believe Battle North can be very different, because if we have success with the drill bit, particularly on the regional exploration, it could really ignite a fire under the share price. And remember, we control 28,000 hectares of land in Red Lake. It's the second largest land package in the camp, behind only Evolution Mining. And, so it's district size scale that we're talking about in one of the most prestigious gold mining camps in Canada, if not the world, that's been around for 80 years, and almost 30 million ounces of gold has come out of this camp. So, we're definitely in elephant country, and we're looking for elephants.
Well, that's what I was asking about the exploration component, because it seems with such a large land package that it's just an untold story for you guys, right? You've not mentioned it. There's no press releases. You've been dealing with other stuff. I get it. But it's kind of like the market feels like it's fully valued you on where you're at today on the production potential. And you'll get a re-rate, but you're not telling that exploration story. So is 2021 about telling the exploration story, delivering regular results? And do you think 6 million plus maybe 2 million is enough to do that?
Well, you're quite right. 2021 will be a pivot year for us. I mean, it was all about de-risking the core asset and putting the horse in front of the cart. We strongly believe now, with a fully funded project and the level of technical due diligence and work that we've done on this project, we have de-risked the core asset, and that's now barreling ahead towards production. So this will be a pivot year where we now turn our attention to exploration on the close proximity targets, and more importantly, the regional exploration, which, as I said, we believe we can drive value for the shareholders over the next 12 months and beyond through success with the drill bit. I don't believe the $8 million is enough monies. I think we are going to have success, and we're going to come back and we're going to get more aggressive on the regional exploration. But, the last 4 years of it's taught the street anything about this management team is we're not just going to throw our money away willy-nilly. We're going to be very diligent, very prudent. We're going to go after targeted, areas on our regional land package and be very formal in how we go about them. There's a big danger when having such a big land package and so many targets, it's almost like a kid in a candy store where you run in and there's thousands of jars of candy and you dip your hand in each one, but you really never get to taste anything or get anywhere. We're better prioritizing our targets, going after them with the monies that we have. And if we have any success, we can expand on those programs. If we don't have success, we work our way down the line, in a formal manner.
Well, I'm trying to understand from you how you go about approaching something like that. So that's the money side of things. So if you have success, there'll be more money to be applied or allocated, I should say. But what model do you follow? Because obviously you're surrounded by some pretty big names there, and they've gone about it in fairly similar fashion. If we look slightly further afield in Canadian, the companies that have done well in the gold space in Canada, there's a bunch of different models, right? The way that they have gone about the process itself, talking to the market, when they choose to actually put a resource together, what size they expect to come to market with in terms of that resource. You've got the luxury, I guess, of potentially, being a near-term producer. So you've got a bit of luxury there, you've got a cash flow. But on the exploration component, there's a whole strategy to that. I'm just wondering, have you thought about that yet, or has she thought about it yet and discussed that with you?
Oh yes, we've been thinking about that strategy for the last 4 years. It's not as if we just thought about the regional exploration, in the last couple of months. We've been chomping at the bit to get after those land packages, those priorities. But as I said, we really didn't want to get detracted from the core asset, which is, really the mine for us. Think about it. If we have any success on the regional exploration, where we're different than your typical, exploration company is, we have all the infrastructure required to process that ore. There's a big hungry mill that's going to be sitting down the road 10 or 20 kilometers away with the power grid right into the site and all the manpower there, the mine manager, the health and safety superintendent. Everything is going to be right there on its doorstep. And of course, we're in a tier 1 jurisdiction. So geopolitically, socioeconomically, given what's happening in the world, this is a very good place to be conducting our business.
It's good. And like I said, I don't mean to keep hammering this one here, but the market 4 years ago versus a year ago, two very different scenarios there. You're going to come at it differently. Your strategies are going to have changed and evolved. So that's what I want to get to. How has it evolved, and what is it today? Without I guess you don't want to necessarily give it away, but what is the company image that you're trying to portray as it pertains to the exploration component here? Because I think personally, you've done a cracking job, and there's a few wee things to get over the line with regards to the production thing, and that's fantastic. The exploration component could be for you with the game changer, I think.
Oh, it could be absolutely massive, Matt. I mean, I'm not going to give any other company names here, but in Red Lake alone, there's a regional exploration company that's had success on a property. They have no 43-101 out, and they have a market cap anywhere between 700 million and as high as $1 billion. I'm on the board of Rupert Resources, who has a big land package in central northern Finland, and they've had a big discovery at Akari. The share price a year ago was around under $1. It's now trading around $5. It's had a high of $6.20 in the last 6 months, and a market cap of $1 billion. So there are definitely other case studies out there, which if we have regional exploration success, quite easily we could add $1 billion to the valuation of this company quite literally overnight. And I think the valuation would be even more because those other projects that we just spoke about don't have the infrastructure that Battle North Gold does, nor, in my opinion, do they have the management team to put mines into production and actually run them profitably and generate returns for shareholders. That's our strength.
Big year for you, boys. Big year. Looking forward to it. Big year. I'm looking forward to it. Well, look, George, thank you very much for that update. I did want to speak to you about the exploration component specifically today, and I've seen the press releases. We'll put a link to previous presentations below. Stay in touch. Let us know how you get on as you move quickly towards that production. Okay.
Sounds great. Thank you, Matt.